Good morning from Chicago, traders. It is Wednesday, July 23rd, 8:03 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. I don't have very much for you as far as news on the overnight. Most recent information is that, as you already know, Apple announced yesterday, came in at $1.28 versus $1.23 expected, but revenues fell short, $37.43 billion versus $37.93 billion. So the Nasdaq actually broke its IB low on that announcement. The Nasdaq had a very unusual day yesterday in that it did not break the first hour's high or low by the end of the session, which is a it's a single-digit probability historically that it would do that. It did until the Apple announcement came out. Other than that, Boeing reported Q2 core EPS at $2.42 versus $1.98. 2014 core EPS was increased by them. Of course, this is a major component of multiple indices, including the Dow Jones. Boeing accounts for about 4.9% of the Dow Jones Industrial Index. GlaxoSmithKline came in at 0.191 British pounds versus 0.216. And geopolitical news, I don't have very much. There's still chatter and noise going back and forth on the Ukraine situation, and it doesn't look like the Israel-Gaza situation is subsiding, so that just continues to linger over our heads. But overall, nothing to report there. As far as economic releases today, we have a Eurozone consumer confidence at 9 o'clock Central today. Let me see. The forecast for that is negative 7.5. Prior is negative 7.5. In the U.S. we have the crude oil inventory at 9:30. Distillates and gasoline as well, and then that's pretty much it for the day. As far as what the market has done and so forth, let's take a look at our charts and see what the ES actually accomplished yesterday. There you go. So the ES gapped up yesterday. If you recall from yesterday's Trader Bite, if you were there, the anticipated action was for responsive selling, with the caveat that we are opening in a gap zone near all-time highs. Remember, 1975 even I've talked about for about 2 or 3 weeks now. I guess 3 weeks. It's been here since July 3rd. 1975, we actually opened right at that price, 1975, tested lower to 73.75, so that's 5 ticks, and it just could not find any further sellers. It pushed into the Friday high by a couple of ticks, and then it found buyers to push through the open swing high. So it created this opening swing high from 74 quarter to 77 quarter. Then it broke lower, and it looked like it was going to go for 71.50, 71 quarter. I actually tweeted that. It looked like it tried higher, and then it eventually got the responsive selling we had talked about, was anticipating, but it only broke through by 2 ticks before coming all the way back to the opening swing high, putting in a short-term double top on the opening swing high, and generally those don't stick around, so the expectation was for it to continue higher to 79.75 was the next measured target. I'll show you where that came from. There's the 79.75. So the measured move targets in this area, there was confluence here at 78.75, 79.75. the next measured move targets at 87.75. And what happened was it pushed 79.50 initially. Oops, wrong chart. 79.50 initially, came all the way back, played around with the mid and VWAP and point of control, and then it continued higher to 80.50, double top at 80.50. The expectation is that this double top would not last, but then going into the late morning session, it rotated all the way back to the open, which set up what was expected to be a pullback to mid and VWAP for a continued rotation lower. What it did instead, so this was a losing setup here. It's just the way the market is. Sometimes a perfect setup is not so perfect. And the market pushed back to 79.25, failed to get out of the IB, and then rotated down to the low, to the IB low again. It was expected to do so from here and start rotating down and breaking the IB low and starting to move towards 71.50 again, since it was unable to push out of the IB high. And what it did is it pushed all the way back down to the IB low by a tick, and then it just sat there through the close, only to take it out once Apple's announcement came out. It moved. Apple's a significant portion of a significant weighting in the ES as it is in the NASDAQ. It's higher in the NASDAQ, but still we're able to get, the market was able to go lower as we had anticipated, but it just didn't do so during the day session. So that's what it did yesterday. Overall, a balanced profile, boxy, an odd-shaped profile, but the value area is valid here, and currently trading 78. The overnight VPOC is 78.25 versus a day VPOC at 78.50. If you do not understand any of the terms I'm talking about, IP, VPOC, opening swing, all that stuff, just go to futurestrader71.com/glossary, and it'll have that information. If you want more information, the best thing I could recommend for you is to go to the chat archive under the resources tab from the main page, from the main menu. Just go to resources and then hover down to chat archive and just go to the very early chats from like 2009 or whatever, and get caught up a little bit. No matter how you trade, it doesn't matter how you trade. This is not a system. No matter how you trade, understanding what the auction is and how the market seeks to test for and find buyers and sellers all day long, understanding that, incorporating that into your own discretionary method is not a waste of your time. Okay, so that's what we did yesterday. We held the gap we held up here, and then the announcement pushed us 72.25, and we were not able to close the gap still, so we still have a gap zone below, and you can see here from the Apple announcement there was a quick flutter, and the market just sat sideways through the Asian session. The Asian session has been brutally boring recently, and then started to trend up. With the European session, we have a very, very upward skewing profile. To me, this profile on the overnight session is essentially saying more up to come. We still have that 80-50 double top. As I said, normally double tops have a low probability. I don't recall what it is. It's been a while since I refreshed that study. On 1400 days, double tops remain remain intact by the end of the day session, something like 13% of the time. Again, past performance not indicative of future results, but the number is about 13%. That they'll remain intact by the end of the session, and these did. So these fell into that 13% statistic, and the market this morning is really pushing against yesterday's point of control, and is trading the heck out of the value area. You can see the value high right here is basically the high of day by a tick, but the point of control overnight is way up on the profile. This tells me that the energy is bound up here, and it's likely to be released on the upside. 143,000 contracts traded so far, not heavy at all. In fact, this is probably the lightest volume session in quite some time, despite the fact that Boeing came out and so on. The market did not get all much activity overnight. So let's look at the migration of value, just because we haven't looked at it in a while. This chart here shows the volume profiles as they stand by themselves. And you can see that balance has been running for quite some time now. And value is basically, yesterday has pushed up to new highs, but essentially it's still stuck. You can see the bar where it closed. It's still stuck inside of this balance zone. So this bar continues to be a part of this balance zone. The key areas below remain 71.25, 67.5, and 59 even. Those are the three key acceptance areas. So the market is likely, if it does not get through 71.25 today, remember I was looking for 71.50 tests yesterday. That's the gap that's still open here with a point of control, naked point of control behind it at 71.25. The ideal situation for buyers wanting new highs is actually for the market to sell off and close this gap, auction this area, make sure that there are no new sellers that want to step into the market at those prices. Once they see that there are no new sellers stepping in, then they can buy with confidence, and that's the normal method for the market to treat what I would call poorly auctioned or incomplete structures below. You can buy with a lot more confidence knowing that on a check lower there was no new interest. Then you can buy with more confidence. But in any case, the market is geared up to try to push higher. Again, we're trading right up against the point of control of yesterday, and the overnight sessions point of control is in line with yesterday's point of control, which tells me that there's quite a bit of energy here to continue to move higher. The next measure move target above is 87.75, standing on its own over here. 87.75 above there, 2000.5. There's actually a measured move that may have been forming with this pullback here, so I'll throw that up here and see if there's any confluence. But 2000.5 and 2005, so above us 87.75, 2000.5 and 2005 are the next measured move targets I have. There will be an addition of this one, this rotation here. This is a very clean rotation, so I'll add that on there after we get off here. So we're likely, if we stay in this area for the next 14 minutes, we're likely to open in value, in range. The close is beneath us, but the point of control is right here. The expectation is for a choppy open, potential test lower into the 77 area or so to seek buyers. If it cannot find buyers at 77 or so, then it's probably going to cross the entire value range into 75.50 and possibly 75. But overall, I think the market has an upward skew still. We do have value moving up with price yesterday, so the expectation is for it to move low enough to find those buyers and then start moving up, assuming it does not continue to move up on the overnight session. It's only 2 ticks from the overnight high here, but we'll see what it does over the next 13 minutes. But the expectation is for new highs and for it to continue higher towards the 87 I was just talking about. Okay, so that's all I had for you. I want to keep this as short as possible. Again, there is headline risk here. You got to keep a close eye on what is happening geopolitically, which could affect Russia, which could also affect the oil prices, gold prices, silver, and so on, which can then have a contagion effect on equities, treasuries, and all that. Other than that, as always, keep your risk tight and watch your emotions. Do not allow yourself to get emotionally tied up in any trade. It is not worth it to fight the market. It is better to just align yourself with what's happening as opposed to trying to impose what you think should happen, given that the fact that price and volume is telling you the whole story, and everything else comes next. Everything else is built on price and volume. Okay? Well, good luck, and I'll catch you tomorrow. Take care.